I'm Peter Ezechek from ShadowTrader.net, and this is the Weekend Edition. Kind of status quo out there, right? We talked about this last week that we were expecting a slow grind to the upside. We got that. We were expecting a little bit of a pullback in Bitcoin. We got that. All of this happening in a shortened week that is leading us into what is usually one of the more bullish months of the year, that being December, all right? All that, and also make sure you stay tuned to the end of this video because it is the official kickoff of the ShadowTrader.net Black Friday sale, and I'll be giving you those special coupon codes for advisories and scripts at the end of the video. Without further ado, let's get into it. Time for some TA, of course, which is the starting point of everything, right? That's the basis of what this show is about. That's the basis of all my trading. It's essentially how I make money in the markets. It is all about the charts. And as we are wrapping up a month here at the end of November, we have to talk about monthlies. We only talk about the monthlies once every month because they really only matter when that monthly candle actually closes. So shifting over here to our touch screen, we've got the monthlies here of the S&P and the NDX. I put kind of a split screen here so we can kind of look at them at the same time. And the first thing I want to point out is, if you recall, about 30 days ago, we were having a conversation about the shadows or different types of candlestick patterns inside the monthlies that sometimes form. And I was talking about how I believe that those shadows have a lot more value or weight when they are on the long time frames, such as the monthlies, but they don't have a lot of weight to them when they're on the lower time frames, right? So we were talking about potential right here of having this topping tail here at the end of the month of October that you can see in the S&P, and you can see it here as well in the NASDAQ. And I really wanted to use this as a starting point just to point out how you can't really hang your hat on these patterns, meaning that a lot of newer traders, and I say this specifically because I fell into this trap very, very early on when I started trading. I used to look at the extremes of these bars when it looked like that, and there was a little bit of a tail going up or going down, and I thought, okay, this is a strong reversal signal, but not necessarily. So there's two things you have to keep in mind. One, the signal is generally not as strong as you think, and two, you must have confirmation. If you're going to use that particular bar that has a shadow or a long wick tailing off as a buying tail or a selling tail, right? You want to make sure that the next bar crosses up over the high or low of that previous bar in order to give you a trading signal, right? We talked about that a little bit last month. And notice that here on this S&P, when the November low came in, it never took out that October low. So in essence, there was no short signal, even though you had the reversal bar on the monthly. And it's the same thing in the NASDAQ as well. It never really crossed, so understand that. And then beyond that, notice that the length of the expansion bar here in November is actually quite large. We had a pretty big expansion of range on both of the charts, and that's generally bullish. Usually leads to a little bit more follow through in the next candle. We'll see if that's true. But also, for me, the main takeaway is I call that a shadow being violated to the upside. If it's a hammer to the downside, it would be shadow being violated to the downside. In this case, the shadow has been violated to the upside, right? We know that we have that bar going up with the sort of excess high there on the prior bar, and not only did you take out the top, you went right through it and you closed very strong. I look at that as a relatively bullish signal in the short term. Of course, we know that it takes a lot of time to build a monthly chart. Anything can happen within the month, but we're just kind of going off of what we've got here at the end of November, going into the beginning of December, and it looks to me like we should see at least a little bit of continuation into the beginning of December of the bullish action that we've seen thus far. Drilling down into the all-important daily charts, if you recall, one of the phrases that I used in the beginning of the video in the introduction was the term status quo, and I think it's very, very applicable to here. I was saying in last week's video that I expected these markets to float higher. That's usually what happens in holiday weeks when it's a shortened week, and that's exactly what happened. And we haven't had much of a change in terms of the charts since we spoke last week, right? If we just narrow down and sort of drop down to a daily time frame on both this S&P and NASDAQ, notice that you still got good stacking here in terms of the 8 and 21 above each other where they should be. New all-time high in the S&P. Are we a little bit overextended from the 8? Maybe slightly, but I don't really think so, because if you look at this pattern here, this is 100% retracement to here, and you haven't gone that far away from it as of yet. Also, remember, whenever you're in this sort of virgin territory up here, there's going to be no resistance, right? We know that in the S&P, at least, there is no technical resistance. Now, if we move over to this chart and we look at the NASDAQ, just to reiterate once again, I know I'm kind of sounding like a broken record here, but for multiple videos and iterations of this show, we've been talking about the lagging here in the NDX, whether or not that's going to turn into some greater weakness. I still think it's something to watch. You do have the proper stacking. The 8 and the 21 are the way they should be. But again, what are you focusing on? The fact that that all-time high here in the cash market is over 21,000 in NDX. You're not even close, really. I mean, you're getting a little bit closer. We're up here at around 20,930 into the end of this week, but you definitely have some work to do. And again, if there's going to be change, remember, we use this term change very often. This is a word that I sort of inherited from Jim Dalton, who is I call him the father of the market profile, and he's taught me so much about the markets, and I'm forever indebted to that gentleman. You should definitely check out his new book, by the way, which is coming out very soon. We'll do a whole piece on that. I guess when it comes out, I'm really excited about that. But I digress a bit, just in saying that change means change in tone, right? Change means change in bias, right? Change means change away from the ruling reason, sort of zeitgeist, spirit of the time of what's happening at the moment. And what's happening at the moment is simply floating higher, right? It's just get it higher. We just finished talking about the S&P chart here. There's no resistance above us, so there's no reason to think that there is going to be any change. So what we do in the charts is we try to look for inflection points where if we were to come down to those points, that would be indicative of change, right? Like we will have change if this happens. And this is a very, very important part of trading in the market successfully that a lot of newer traders don't understand. I think they don't grasp it because they don't have enough time in the seat, is they believe that they need to be doing something all the time, or they act on a whim or a hunch or what they feel is going to happen, instead of letting the market tell them what is going to happen by actually doing something. What I mean by that, for instance, if you looked at the NASDAQ, is why would you short it here unless you took out, for instance, this consolidation, right? You see the market's kind of in balance over the last, say, 4 or 5 sessions. It hasn't moved much. And as I've been talking about in prior shows, where's the greater potential for change, right? Under balance area here and under balance area here, right? You want to have the market do things, right, in terms of, let's just say for this example, we're talking about potential for moving down. The market has to move into an area where it would create overhead supply, right? That is the only thing that's going to bring prices lower, is an imbalance of sellers to buyers. And why would that imbalance ever occur if you're up here and everything's fine? But if all of a sudden you move to the low end of this range, now you have to start to think to yourself, aha, everybody who traded in here, or should we say at least probably 50%, because it's a relatively balanced area, half of those people are now wrong. They are going to be forced to act, right? So in the markets, you don't want to front run things. You don't want to get into a situation where you're expecting somebody to act in a certain way or expecting the market to act. It's a lot safer and a lot more consistent. It'll help your consistency, is what I'm trying to say, if you let the market tell you what to do and move into areas where it's going to create an imbalance of supply and demand. So for now, as far as the downside is concerned, I'm not really seeing that at all in the NDX. If we start to fail this area here, right around the 20,000, say 675, 680, then you may have some sort of change in tone. But for next week, what you want to be watching for is, I've purposely drawn in, let me just grab this over here, I've drawn in some of the downtrend lines here in the NDX, because I think it's just very important. Since we are behind the 8 ball, so to speak, and we're not at those new all-time highs, I'm just looking at the downtrends here, primary and secondary in the NDX. And if I can see those lines start breaking, then of course it increases the confidence that maybe we see that all-time high at some point in the month of December. Time now for our sector spotlight. I like this segment specifically because we get to drill down into one of the 11 sectors of the S&P. All of them are important. As we know, some of them have greater weight than others, such as financials and technology and healthcare, etc. But they're not only all important, but they also all can have trade ideas. Remember that this is a very rotational market that we are in, and it is very common in this market, as we've seen lately, that you could have some sectors extremely weak and that money is just flowing into other sectors. So maybe if a trade is not working in the more common areas such as technology or financials, it might be working elsewhere in some of the sectors that you may have overlooked, such as real estate, materials, consumer staples, etc. So to that end, we're going to talk about these two sectors today. Usually it's just one. Today I decided to highlight two for you. One is energy, which is XLE, and the other one is XLRE. Together, these probably make up about 6% or so of the S&P, give or take a little bit. So it's not that big of a driver of the direction of the market. But as I was saying before, this is a rotational market, and oftentimes there are trades. And in these two particular sectors, I wanted to show you both of these charts at the same time of both the energy and the real estate to see if there are some potential trades. Now, I will say with both of these sectors, these tend to develop over time. So if I'm looking at something in the energy sector or the real estate sector, I will say it may usually have a longer time frame than you're used to hearing about from me. Obviously, my sweet spot is sort of that 2 to 5 to 2 week period that to me is just so beautifully traded with weekly options. That's really the sweet spot for that because you got that theta crunch, et cetera, et cetera. Some of these ideas might be a little bit more longer term, but let's look at this energy chart to start here. We've been having this pullback here from this area, and we almost got there here at 98. You can say this is 98, 97, this is 98. So we were almost there, right? And I'm a big believer that whenever you have a chart that basically looks like this and you retrace 100%, whatever pullback comes off of that area should be signaling to you that it is buyable. And that's what I'm seeing happening right here, where we've come off that high, we've come in. Notice that we've taken out the 8 in the sector, but the 21 is still here. And because this is a slightly longer term play, you want to be looking at those names like XOM, CVX, PSX, etc. Just pick any names in the sector and be buying on pullback, but more in an accumulation mode rather than a saying, okay, this is the exact low, like I'm just going to buy this stock here. It may be something where you have to break it up into tranches and say, okay, I'm going to buy a third, a third, a third, or a quarter, a quarter, and another quarter, right? As it comes in, because it can be a little bit messy. And of course, there's always the wild card that it is driven by the price of crude, which I think seems to be firming up a bit at the lows that it's at, right? The crude hasn't really moved in a while. It's been in a relatively tight range, but it's not going any lower. So that also is potentially a help or a tailwind for the energy stocks. So anyway, I like the energy stocks here on a pullback. Moving over into real estate, I purposely kind of put the chart on the screen the way it is to show you the distance just here from this swing high. Remember, it may not feel like it right now, and it does feel like they're kind of waffling a little bit, but we're in a lowering of interest rates cycle right now, right? The market knows this, and you can see that the real estate stocks like that. You've come off these lows here, higher low put in here, right? Fed kind of changes course. These go higher, and look what happened today on Friday. Move right here back up to this swing high. So this is the stuff that I think is going to probably grind higher. If I had to pick a sector that I'd like for the beginning of next year, for all of the first quarter of 2025, I would say it would be in these stocks. Try and find the stuff that is aligned with how things are moving demographically, right? That means that office might be a little bit harder than residential. The stuff that is dealing with aging, et cetera. I've talked a lot about OHI, which I really like, which deals in centers for assisted living and things like that. O is always a popular one, which is Realty Income Corp. That's the one that pays the dividends monthly, right? Be selective because there's a lot of different ways to play this sector. Most of them are REITs, which are great because they all pay very, very large dividends, which is excellent. So be selective. But again, you want to use these sector charts here as the driver of that trade, right? Showing you what this sector chart is doing, and then you kind of drill down and pick some individual stocks. Go with a basket if you can. If you're going to be playing the sector, like say for all of Q1, don't put all those eggs in the one basket. Rather, go with the basket of stocks. Pick, say, 3 to 5 and go with them. And you may want to do the same thing in the energy sector because they do all move kind of together, but some obviously stronger than others. So pick ones that you believe are winners. Get a small group of them together, and that could be your play for the energy or real estate sector into the end of the year and potentially for Q1 in 2025. Time now for our play of the week, where I take something that has happened recently in the Weekly Options Advisor and we break it down in an educational manner. Just as a side note, I'm going to try to concentrate more on stuff from the Live Trading Suite. We've got so many cool things going on there. We've got DT0 stuff going on, futures trading, etc. So in subsequent editions of the weekend show here, I am going to be talking about some trades from the other room, from our other moderators. So I'm pretty excited about that. But this one definitely comes from the Weekly Options Advisory, and it is Costco, as you can see here. So let's just change over to here so we can see what the actual trade is. And this actually is interesting too, because I just want to give a shout out here to Mr. Nichols here, Marshall, who has been helping me out in the Weekly Options Advisory. And this is actually an idea that he put out, which I sort of worked on with him, so to speak. I sort of refined it a little bit. I'll get to that in a second. But Marshall is a gentleman who's been helping me out in the Weekly Options Advisory, and he is doing some trades there, which is actually really cool. Obviously, the bulk of the trading is still done by me. I have the track record that we keep track of and everything, all transparent for the subscribers to see. But he has been adding some trades himself, which is great from a value-added perspective, because it's essentially more trades for people to do. And he's also managing them from start to finish, as I am as well. So what's going on here is basically some credit collection in Costco, but what's really educational, I think, here is how it was done and why it was done. And when we get into the charts, you'll understand better as to why credit collection in Costco for next week makes sense. You can see Marshall, when he put out the alert here, he sold 2 naked puts at the 930 level for $1.14 premium. Okay, so that was the original trade, which works on its own. And then I said to Marshall, I said, this could also be done as a BWB, because I saw the trade come in. I said, I like that. I could sell those puts too. And then I thought, you know what? It could be safer with a different structure for a little bit less credit. What if we did a broken wing butterfly and we actually bought a 930, 250, 930, 900 put structure, BWB. So obviously the 3250 and the 30 are very close to each other for a 250 width, and then we bought the 900 to cap it off for margin. And instead of the $1.14 credit, we only got a 58-cent credit, but of course with a lot less margin outlay. So those are those two trades. So as we move into the chart, what I want you to focus on is the fact that the put was sold at the 930 strike, and the broken wing butterfly obviously also has the 930 strike as its mid. And that's what's really, really important, what I want to talk about in the chart, because there is specificity, so to speak, for lack of a better word, to why 930 should be the area where we sell credit. Remember, selling credit, at least the way that we do it, is never an exercise in guessing. It is never an exercise in just picking that strike that has a certain amount of premium, like we'll just go down the chain and we'll sell the one that at least has $1 or something like that. That is a recipe for disaster. You need to have your short sales of your options very, very much aligned with your technical analysis. So that being said, let's take a look at this cost chart together and see what's going on here from a TA basis that makes the 930 puts attractive into the end of next week. And so obviously you got a classic uptrend going on. You got a high here, you got a higher high up into the 975 area. So the stock is in an uptrend, which is good, right? So if you're going to be selling puts, obviously you want a stock that has a propensity to hold up pretty well. But here's where things get noteworthy as far as that 930 strike. Notice that your uptrend from down here, which is from the beginning of November, is terminating right in here, which is at about 935. And remember, we're selling a 930 strike. So that's point number one, is we are below the uptrend line. We also have 8 EMA here coming in at about 956. And look where the 21 is coming in, right at the trend line, right? So now you've got put sale below the 8, below the 21. Now, if that wasn't enough, I also want to point you to this dotted line here, which, as you can see, is starting right from down here, which is about 1115, I believe. And this is really, really important because it is the anchored VWAP. It's the A VWAP from that level. And if you've been paying attention to this show, you'll notice that I've been feathering in this concept little by little, kind of getting you acclimated to it slowly, probably because I myself am getting acclimated to it slowly. It's certainly nothing new. I'm not the inventor of it. People have been using anchored VWAPs forever. But as you bring new things into your trading, you want to do it kind of slow as possible, get more and more comfortable with it, so then it becomes ingrained and it's actually a part of your arsenal. That's how I feel about the anchored VWAP VWAP, and we're going to be doing some shows specifically on this in the weeks and months to come. I'm going to do kind of a primer on anchored VWAP and why it's so important. But just to give you a brief overview, for those of you who don't know, it's basically the volume-weighted average price from an anchor point. And this works very well in day trading of futures. I use a midnight reset on my anchored VWAP for futures day trading. But for swing trading of stocks or looking where you're going to sell credit or anything that is kind of, as I always say, that 2 to 5 day time frame, weekly options, etc., the anchored VWAP can help you a lot because it is telling you where the volume-weighted average price is from a specific point. And that specific point always has to be a pullback high, pullback low, beginning of a month, beginning of a week. An earnings report could be the beginning of a year. Some people anchor their VWAPs, all the way from the beginning of a year. There has to be some event, preferably technical. I like to use pullback, swing highs, swing lows, where you start it from so that you know what the volume-weighted average price is from that peak or trough. And that's why this is noteworthy in Costco, because the stock has been in an uptrend for a while, but the last pullback we got was here in about mid-November, and if you calculate the volume-weighted average price from there, notice where the little dotted lines come up to, right at 930. So no coincidence, right? It's all ties in. As I talked about, 821 trend line, VWAP, more than likely, usually stocks, if they're going to come in and they come to the VWAP, they almost always have a reaction there. Why? Because that's the tipping point where most of the people are then, quote unquote, breaking even, right? They don't need to be selling the stock below that level because there is no imbalance there, right? That's parity. That's the volume weighted average price of the move, right? We can call this the auction, so to speak, of the auction that started down here from November 15th. So that's the reason why for us, ShadowTrader Weekly Options Advisory this week, we are short puts in Costco into the end of the week, and again, we are using the 930 strike as the strike price rather for those short puts. Time now for our number one draft pick, where I leave you with a really solid idea looking forward for a potential trade. This week it is going to be NVDA. Obviously, we've talked about it before. This is nothing special. Everybody knows about this stock. I did want to bring it to your attention, however, this week, because I think there's potential for higher into the end of the year. I do believe that nothing is probably going to derail this market's buying activity until potentially the mid of December, where there is going to be a Fed meeting. However, that has also been pretty transparent. We kind of know what we're going to get. And so unless the Fed comes out and sort of changes tone abruptly, I don't know if even that is going to rattle this market, so we shall see. That being said, I do believe that NVDA should float higher, and there's a couple of interesting things happening on the chart right now, which is why it is a stock to talk about for a potential number one draft pick. So pullback is happening, which is really the number one thing you want to be looking for in NVIDIA, because you don't always get one, or at least get one that's relatively deep. And in this case, we got one that's relatively deep because notice we've got swing low here, and notice where the last swing low just came in, relatively close to where we pulled in before. So you've got a decent pullback going on. I have also noted that you have a pinch to the downside, which is a little bit more bearish, so be aware of this. You got a pinch to the downside on the 821. So what you want to be watching for, especially in the first week of December, is to see if this does not follow through into lower prices. And if it's not going to follow through into lower prices, what I believe is going to happen is that the uptrend line here is going to hold, which is 130, and even more than likely, you will not breach these low 130s, which happened earlier this week, right? That was the low there on Wednesday. Notice that you came back and tested that double bottom from that other pullback low. So holding above these is probably going to be a more bullish signal in NVIDIA and will cause it to turn around back to the upside. So this has a lot going for it if you think about it, because you've got support of a prior low that you're above, you've got a trend line moving just below that, and then we were just discussing that anchored VWAP, and I purposely put that in here right from the swing low here, which is early August, right? You always want to pick a really solid swing low so that you can define the entire auction from that point. And notice where the anchored VWAP comes in. From that level, the anchored VWAP right now is ticking at right around 125. A little bit lower than that 130, a little bit below the trend line, but in a sideways to up environment, that's also going to float up. Or you can just use that as another potential inflection point if the stock was going to come down further. Let's say that it does come down to the trend line. You want to see, okay, is that anchored VWAP going to move up, meet it at the trend line, which would be a confluence of support, an even better entry. Or if you lose that trend line and the anchored VWAP is still below, now at least you've got some line in the sand to say, okay, we did break trend, but let's see what happens at the anchored VWAP. So point being is, if a stock breaks trend and you've got an anchored VWAP below it, all is not lost, right? You've got one technical signal that is giving you a short, but you may have another technical signal which is long just below it because that anchored VWAP is coming right underneath it. And that's why I'm going to be talking a lot more about these anchored VWAPs in subsequent programs, because I'm noticing that they are really important. They really do help support prices on the way down. And more importantly, they often support price in areas that are not technical, which I think is really, really cool, because everybody's kind of looking at the same thing. They're all looking at the same charts, but they may not be looking at this, so they don't realize that, they'll think, okay, well, you lose trend. This would be a perfect example. They would initiate a short thinking that now NVIDIA is going to break trend, but hey, guess what? The anchored VWAP is like $3 right underneath there, and you hit the AVWAP and you shoot right back to the upside. So lots of technical things happening in the chart. And again, be careful with this. Obviously, you're getting that little bit of a pinch to the downside, but I did want to mention this stock because if we are to have a continued slow grind higher, which I believe we will, in the month of December, this is a fave. Everybody loves it. Obviously, the fundamentals are undeniable, and it could certainly be in play. And that's our show for this week. Thank you, as always, for spending a little bit of your weekend with me. So just to recap some of what we were discussing in the program, status quo means lack of change, which means lack of change from upward movement. Buyers are in control of this market, and it doesn't look like they're going to be derailed anytime soon. I don't see anything really technical above us that is going to change that tone. That NASDAQ is still lagging, but remember, as rotational as this market has been, it could easily flip back into favoring those tech stocks, which have been, I should say, a little bit out of favor recently. All right. Coming up in this program in the month of December and into 2025, I'm very excited because I'm going to be adding some more segments. We're going to be doing a little bit more educational stuff. I want to do like a looking ahead segment where we look at economic data that's on the slab coming into next week. Just a number of different ideas I have for different segments. And remember, if you have ideas for things that you feel should be put into this show, put it in the comments section of the video or email me here at the address that you can see in the Chiron, asktheshadow@shadowtrader.net, and I would love to get your input on different segments that you think might be useful to you to have in the program. All right. Black Friday is today, and that means that it is time for a sale. And for us, these are the coupon codes that you need. I'm very excited to announce that from now until the end of December, I'm going to run this actually for a while, all of the advisories and scripts that we sell at ShadowTrader.net are going to be at a deep discount. We're doing 30% off the advisory. So if you've ever wanted to join Live Trading Suite, which is the stocks and options room and the futures room, or you want to trade with me personally in the weekly options advisory, now would be the time. 30% off all of them means that we have the 1 month, we have the 3 month, and we have the yearly. So you can get a deep discount, especially if you go out to the yearly. It's a much bigger discount. And all of the scripts that we have on our site, if you've been thinking of getting the iceberg tick or the weighted AD, tape reader, cumulative tick, etc., all of our scripts, which have been so popular for so long, they are all going to be 20% off. When you are in the shopping cart section of our website, these are the coupon codes that you want to put in. If you want to get 30% off of any of the advisories, use coupon code advisory30. And if you're buying any of the scripts, use coupon code script20. All right. So pretty excited about that. I'm sure we'll have lots of new people joining us in our advisories, and I'm certainly going to welcome you in advance. I'm excited to have you there. All right. Make sure you hit those like and subscribe buttons and the little bell icon so you can be notified when Shadow Trader posts new content. I'll be back next week. Until then, I wish you good trading and good night.